Welcome, ladies and gentlemen, and we are still at the offices here of the group of Treasury Metals and Laramide Resources. Now we take the opportunity to talk to Laramide Resources also in addition. With me is Marc Henderson, the CEO of the company. Marc, welcome and thanks for having us here.
Thank you for having me, Johanna. Nice to see you again.
Yeah, thank you. Beautiful view outside here because we are on the 36th floor of the building of the stock exchange. So fantastic, I would say.
I'm glad you enjoyed it. I'm sorry about the weather.
Well, that's okay for me. No problem at all. Yeah, Laramide Resources, I think it's easily a year ago that we were talking to each other. So maybe you can remind us a little bit, 2017, what were the highlights for you in the company? What went good? What went maybe wrong? I don't know.
Of course. Well, the big thing that every uranium company needs, obviously, is a definitive turn in this uranium
that's
price.
for sure.
I think we're going to get that. We saw some interesting signs with the market starting to tighten up or think about tightening up in the early part of the year and then again in the later part of the year. And we could talk about that a little bit later. But we had done a transaction at the very end of 2016, which was a very significant transaction and would have been the highlight of last year, which is that we were a major royalty holder on a very large resource, ISR, in situ recovery resource in the western United States, in New Mexico. And we managed to complete that acquisition, and I think the market started to understand a little bit more about the potential of that acquisition. It's this Church Rock acquisition in New Mexico. And over the course of the year, as we did our work, we concluded with a resource study, probably the first resource study that had put together all of the various sections of land that comprised most of the initial deposit, the Church Rock deposit. And that was quite a pleasing result. We have a very nice, very high-grade resource of just north of 50 million pounds. And in terms of the quality of that resource, in terms of the grade, as these ISR resources go, the grade is on the order of 0.08, 0.09, which compares very favorably, I would like to mention, with some of what is now known about Kazakhstan and some of what obviously they're the big gorilla in the marketplace, and virtually all of their production is in situ recovery of a similar nature, obviously, of the type of ore bodies.
Fantastic. I mean, also in situ recovery, has a lower capex and a lower opex, of course. Also, so let's say, hopefully uranium markets are turning. We will talk about the markets in a second. Then you would be, in the position to maybe start a production later.
Yes,
right?
100%. So one of the benefits that came with this, we bought it from a company. We were the royalty holder that I mentioned. The company that had all the resource, they had gone and gotten a big chunk of the licensing done that's required to put it in production. So they have a NRC, which stands for Nuclear Regulatory Commission license, which allows us to produce from these certain sections of land and also ultimately to build a recovery facility of up to 3 million pounds in a very specific location. And that's licensing that obviously takes a considerable period of time to accomplish. But the big benefit, I think, that's widely known with ISR type projects is they can be sequenced quite readily in terms of well field development, because you don't necessarily need to bring on the entirety of the deposit. You can bring it on sequentially. And in terms of capex vis-a-vis open pit mine, or in particular with some of the very well-known now high-grade underground mines, the level of capex is we're talking 10% of the capex or less of what a typical large-scale operation would require in those type of mining methodologies. So it is deemed to be quite attractive, and also relatively quick time to production on the assumption that you've got your permits.
Yeah, absolutely, great. So some words on the market. What are your thoughts?
Well, we're all waiting. It's obviously been a long haul since Fukushima. It'll be next week, I think, is the 7th anniversary. There's progress in Japan. I think the market is slowly tightening up. I think we now have today as many reactors operating globally as we're operating when that unfortunate incident happened. And I think we're now on track to get to a number in the not too distant future of something like 500 reactors operating. So there is demand growth. I think the whole question is when this whole supply demand intersects, and I think the market is, in my estimation, is going to move before that time frame. Everybody, even the industry leaders, are now talking about things like lower for longer, and we may not see a market balance, if you will, until 2020. But I really do believe, given the nature of the very large future demand, with programs like the Chinese program, which is basically a new national nuclear build program where they're putting 60-year reactors online that have 60 years of fuel demand, I think to rely on waiting until the market gets into a very fine balance, and then you're going to start making purchase decisions going forward. I just think we're going to see it before then. Just my personal view, but it's been a long haul, and it won't take much. It's a psychological thing on the demand side because the reactor, the futilities, and the folks that own the reactors, they do tend to operate with kind of with a herd mentality, and I think as long as everybody's buying at certain prices and they have a view of the market, the view of the market, though, as we've seen in past supply, transition points, inflection points, the psychology can change very, very quickly.
Yeah, absolutely. Yeah, sometimes I have the feeling everybody's waiting like the first one to move, and then 100 people want to go through the same door.
Yes, well, that's the nature of a market. That's the nature of it's very similar to stock market behavior.
Yeah, absolutely. So let's assume those 100 people are moving through the door and we get the prices back to whatever, $50, $60. What will Laramide do then, first thing? And second thing, what differentiates your company from the rest?
50 to 60 we'd be having a very large party at that price. I think I think we're going to be surprised at the price performance of the group of stocks that's probably considered to be the basket of the survivors, if you will, that remain. And those companies, there's maybe 20 of us that are left in this universe of future developers with projects of consequence that could be future suppliers to the industry. And I do think when we start to see this price move up towards, say, $30, I mean, 30 is going to be like the new 60 to begin with. And I think you're going to see a very interesting reaction from all of those companies, and you're going to get price performance immediately. You're going to get capital returning quite readily to the marketplace, and so I think we'll probably move in that kind of a progression, absent a absolute supply shock like you saw the last time with cigar. Like if we just have a market that's moving because it's time for the utilities to start recontracting again, and the spot price moves, and then we start to see some consistent performance, and the capital markets start to believe that we're really coming off the bottom, then I think you're going to see that kind of action to start with. So I think you'll get a very favorable response, frankly, from across the board when we start to see pushing towards 30 spot.
Yeah, definitely. And but what makes then Laramide different?
Well, I think you really do need $50. I would say most of the meaningful new supply that comes on needs $50 to incentivize them to make a real rate of return on these projects. Now we have some projects, the ISR projects in particular, because as I mentioned, you could bring those on at relatively small scale and you can then sequence them in. And most of those things at $40, most of those would be very profitable. So I think you'll see those kind of low capex type projects come in first, and I think ours would be obviously one of the first. I mean, we think we can be in a position, if the permitting went well, then you're looking at a scenario by mid-19 that you'd hopefully be in a position where you could press the button and start building it.
That's interesting. I mean, with just I would say hypothetically, what costs such an ISR for your property then?
Well, we haven't done all the requisite work that you need to do. There was some feasibility studies done before. I mean, the better ISRs in the United States were operating sub $20, and I think that's a pretty good rule of thumb. The best ISRs in Kazakhstan, obviously the nature of the ore bodies are more substantial. The best ISRs there are operating sub $10 cash costs, which is why they can survive in this environment. But the best part of the legacy resource in Kazakhstan, we're probably on based on what I heard at the conference here from a presentation that was done. I think you're on the back half of the resource of the highest quality, highest grade. So I think we've got to move to an environment that's at least $40 to $50 before you're going to see the next wave of mines come in. So it's really a when not if question on when you're going to see price.
For sure, but what I mean is, what would it cost capex wise to bring like one of your properties into the ISR production mode?
Oh,
just
we
a
think,
rough guess.
Yeah, we think ballpark because it's essentially a well field.
Exactly, yeah.
And then you can have a recovery process where you can take it somewhere else for final recovery. So you're with a capex on the order of $30 million, you're probably up and running. And that's consistent with some of the other U.S. operators when they've got up and running. And obviously, if we built a process recovery plant, that would be a more significant number than that. But even that would be quite a smaller number in comparison to a brand new, very large, open pit mine recovery complex like we would have it ultimately with our Australian project, which is obviously a much different nature of that is a much different project. And we've got PEA numbers on that are on the order of sort of $350 million, but very much larger production, 5 million pounds a year type production potential.
Okay. Super. Well, great. Thank you very much, Marc.
Thank you.
Great update. And let's keep fingers crossed that this uranium price finally starts to move.
Yeah, we'll get there.
We need that.
Yeah. Thanks again, Johan. I'll look forward to that.
Absolutely. Thank you very much. Great.
You're welcome.
Yeah, ladies and gentlemen, that was Marc Henderson, the CEO of Laramide Resources. And you heard it. Still, we are waiting, of course, for a better uranium market on the one hand. On the other hand, they have also done some work on their projects to move them forward, to be prepared if the market starts to run. And you heard it, ISR, very quick and much faster, really to build on, to go in production. Maybe also from 2019 on, the company is already in a position then to benefit from a higher price environment. So I would say check out the company. Thanks for watching us. Bye-bye from Toronto.